1963, Wall Street was booming, American Express was riding high, and deep in the New Jersey docks, a man named Tino De Angelis was quietly filling oil tanks. At least that's what the banks believed, because inside those massive steel tanks and worth millions in collateral wasn't oil, it was mostly water. And that lie would nearly bring down the American financial system. Tino De Angelis didn't come from power, he didn't wear Armani, he didn't graduate from Wharton, he was a butcher from the Bronx. But by 1962, he was the president of Allied Crude Vegetable Oil Refining Corporation, a name that sounded official enough to get him into any boardroom. Tino was running a business that traded in soybean oil, the kind used in cooking, margarine, and processed foods. And it just so happened that soybean oil was one of the most heavily traded agricultural commodities at the time, which meant one thing: big money. Now here's where the scam starts. In commodities, traders don't move physical product, they move paper, receipts, contracts, loan agreements. So, instead of dragging barrels around, you just hand over a document called a warehouse receipt, a legal paper that says, this much oil is stored in this location, and it's yours. That receipt becomes as good as cash. And Tino? He figured out how to fake the receipts, fake the oil, and still get real money. He leased industrial tanks near the New Jersey port. He filled the top few feet with soybean oil. And the rest? Water, because oil floats. So when inspectors dipped their measuring sticks, they hit oil. They stamped the tanks, signed the papers, and walked away, never once checking the bottom. And with those stamped receipts in hand, Tino had leverage. He went to banks, to investors, even to American Express, who had just started dabbling in commodities finance. They didn't just loan him money, they guaranteed his trades. They stamped their name, American Express, on his warehouse receipts. So now, every other bank said, well, if Amex trusts him, so do we. By late 1963, Tino had over $150 million in financing lined up. That's over $1.5 billion today, secured on liquid assets that didn't exist. The whole thing was a magic trick, an illusion built on trust, timing, and confidence. And it worked. Until someone decided to check the bottom of the tank. Late 1963, Tino De Angelis was flying high. He was doing $200 million in trades. His company was everywhere, in headlines, in warehouses, in banks' loan portfolios. He even had the Pope's blessing, literally. He once sent vegetable oil to the Vatican as a donation. But underneath the illusion, cracks were forming. You see, when you build an empire on water, all it takes is one leak to drown everything. One day, a mid-level inspector decided to do a full dip test. Not just the top, all the way to the bottom. What he found wasn't oil, it was water. The tanks were nearly empty. Just a thin oil layer floating above 98% nothing. In an instant, the scam unraveled. American Express got the call. They'd guaranteed tens of millions in fake oil receipts. Now, they were on the hook for $58 million in direct losses. That's $500 million today. And just like that, Amex, a blue-chip titan, was on the verge of collapse. Investors panicked, banks started pulling credit lines, soybean futures crashed, and every trader who touched Allied crude got scorched. This wasn't just a bad loan, this was a financial cancer, spreading through balance sheets, fast. American Express stock plunged, their credibility gone. Other banks took heavy losses, the market froze, and suddenly everyone in New York finance was asking the same question. How the hell did a butcher from the Bronx nearly destroy Wall Street? De Angelis was arrested in November 1963, charged with fraud, sentenced to 7 years. But the damage was done. The salad oil scandal didn't just cost money, it shattered trust. It exposed how fragile the financial system really was, how easy it is to fake value when no one bothers to look under the surface. This wasn't a back alley con. This was a billion-dollar illusion, backed by paperwork, and built on blind belief. The collapse was public, but the cleanup, that happened in the shadows. American Express was bleeding. 58 million gone, stockholders in revolt, and their credibility in the dirt. A company built on trust had just backed the biggest scam in modern financial history. And for a moment, it looked like Amex might not survive. Executives scrambled. They fired people. They issued statements. They begged investors to stay in. But behind the scenes, they were holding crisis meetings around the clock. And then, a lifeline. The Rockefellers. David Rockefeller, head of Chase Manhattan Bank at the time, helped engineer a deal to keep American Express afloat. Because here's the truth. It wasn't just about saving Amex. If American Express went down, it could trigger a domino effect, a full-blown financial panic. So the system did what the system always does. It protected itself. The government never launched a deep investigation, no congressional hearings, no major reforms, no new regulations. Because if they looked too closely, they'd have to admit just how broken the system really was. Instead, they quietly rewrote internal policies, tighter loan approval processes, stricter auditing rules, more oversight on warehouse collateral. But it all happened behind closed doors. No headlines, no justice, just a quiet pivot. As for Tino, he got out after just 7 years, never paid the money back, and lived out the rest of his life in quiet obscurity. No one talks about him today, not in business schools, not in trading rooms, not even in Wall Street history books, but they should. Because the real danger wasn't De Angelis, it was the system that let him in, that backed him, funded him, and failed to stop him because he looked like profit. And in finance, profit blinds everything. Wall Street survived, American Express survived, Tino faded into history. But the game never changed, because what De Angelis did wasn't magic. It was manipulation, of paperwork, of perception, of a system built more on trust than truth. Think about it. He didn't use weapons, didn't hack anything, didn't even lie that loudly. He just gave the system what it wanted to see: clean receipts, proper signatures, and the illusion of assets. It was enough to unlock hundreds of millions. And if one inspector hadn't checked the bottom of a tank, it might still be going. Fast forward to now. And tell me it sounds different. Crypto rug pulls, fake startup valuations, AI companies with no tech, influencers selling dreams in exchange for wire transfers. The playbook hasn't changed, the setting has. From soybean oil to digital coins, from tanks of water to balance sheets full of air, Tino's story is a warning, a real one. Because it proves the system doesn't just get tricked, it often chooses to be. When the money's flowing, when everyone's eating, nobody wants to check the bottom of the tank, but that's where the truth always hides. Never trust paper over proof, never confuse access for legitimacy, and if something looks too profitable to question, start asking questions. Because the next De Angelis won't be pushing salad oil. He'll be in a hoodie, in a WeWork, pitching the future, and waiting for you to believe it. This was the lesson. Don't get finessed.